Hello traders, it's Sunday, August 4th, and it's time for our weekly video. You've got a lot of internet gurus out there who give you a pick and then you don't hear from them. You don't know how the pick did. That's how this is different. I don't do that. I go through every single pick that I've made previously and I show you how it's performed. I give you that pick when you still have time to act on it. I'm not showing you a photoshopped P&L. I'm giving you an actual trade. Then once we review our picks, we do our market analysis, and then we use our systematic trading approach to find new trades. That's how all of this works, and you can go back and watch my videos since the financial crisis in 2008 and see that what I'm actually teaching you is valid. It's time tested. It works week in and week out. If you like the content that I produce, please give me a thumbs up, subscribe to my YouTube channel. All of this helps the algorithms and it helps me reach a larger audience because ultimately that's what I'm trying to do. I'm trying to teach you how to trade. So, you know that for the last few weeks, I've been encouraging you to day trade because I felt that the market was coming up on an inflection point. We really didn't want to do a lot of swing trading. We needed technical confirmation before we could start getting into some longer term bearish swing trades. We'll get into the market analysis in just a little bit, but I know how all this works. I only do a couple of videos a week, and by the time you're able to watch those videos, there's a lag. So if I'm coming out with bullish trades and bullish trades and bullish trades, when the hurt finally comes, you're going to be stuck because I've been giving you bullish trades. So instead, I'm trying to give you some lead time to make sure that you're adjusting your portfolios and your trades and you're reducing your long exposure. Eventually, when we get the pullback, you're going to have a lot of stocks that you can take a look at because you'll have developed a watch list based on the picks that I've given you. So please, again, don't take my word for it. Go back and watch my videos from 2, 3, 4 weeks ago and get a feel for the warning signs that I was already seeing in the marketplace. ULTA, that's a short that I gave you about a week and a half ago. That was during one of the live events. And you can see how the stock had broken down. This was a breakdown below a major horizontal support level, and then it compressed. In my most recent videos, I've reviewed the stock and I've told you I still like the short. It had to digest some of these losses and then bam, the sellers were right back again this week. So that's performed well. A week ago, I showed you Costco. The stock has been relatively weak. I love this long bearish engulfing candle here that told me that the next move in the stock was going to be lower. You can see how the stock sold off and then it compressed. Had to digest some of these losses. Eventually, the sellers were able to knock it down again and then it's compressed. I still like Costco as a short. I believe it's going to have another leg lower, perhaps down to the 100-day moving average. I do feel that right now we're seeing a little bit of a flight to quality after this market decline that we saw this week. Costco is a relatively stable stock because it's a consumer defensive stock. These are not typically big ticket items for Costco. People are buying groceries and such, so it's going to hold up relatively well, but I am looking for it to stage its next leg lower. I've also mixed in a couple of longs in there, so we'll take a look. RTX was a long that I gave you about a week ago. I'd mentioned we're day trading, lots of intraday volatility. So it's good to have some longs and some shorts. And you can see this is what relative strength is all about. This is the market. This is a daily chart of the market here. You can see heavy selling in the S&P 500. What has the stock done during this sell-off? It's continued to move higher. HWM was another long that I highlighted during the live event this week. Mind you, during a live event, we were pre-FOMC. We were pre-Amazon. We were pre-Apple. We were pre-jobs report. lots and lots of information coming out this week. So I was not willing to commit to one side or the other on a swing trading basis, but that's about to change. So make sure that you watch the rest of this video. I'm going to be taking some time off, so I'll be doing this video. I'll do a live event Wednesday, and then I'm going to be off for about a week or so. So the instructions that I give you in this video are going to be very important because they're going to have to serve you for about another 10 days. So you can see how HWM held up well until Thursday. Friday morning, we get this open below AVWAP-E, and we already know that when we have a stock that's reported earnings, we need to give it 4, 5, 6 days, maybe even 2 weeks to let it kind of digest these gains. But there were some nice opportunities to day trade that when we did the live event on Wednesday. So I'm going to take a look at Wednesday's price action. Live event took place in here. Stock did have a nice move higher, and then it closed a little bit lower, but you can see even Thursday, nice opportunity to take some gains, and now you get into a little bit of a gap reversal in here. There's no reason to day trade this stock from the long side. Merck, in the Wednesday live event, was a short that I gave you. So let's take a look at Merck. Let's see what unfolded. I'll tell you how I traded it. So we had this nice decline in Merck on Wednesday, and the live event came out somewhere about in here. And you can see how the stock continued to move lower, closing on its low. So from the time the live event was put out, I know I was trading the August puts, and those were the 115 puts. Those are somewhere in the $2.80 level when we started the live presentation. And by the low, this was on Thursday morning, I exited them at about $3.70. That was a nice trade, a good winner. After a couple of heavy days of selling, you can expect that the stock is going to find some support. That's a theme you're going to hear a little bit about in just a second when we're talking about the market. So in any event, yes, Merck did bounce, so you had to take some gains. Take a look at the daily chart here, and you can see big, heavy selling after earnings. Big follow-through selling. Well, this is what we were taking advantage of Wednesday and Thursday morning. So you got to take some gains along the road, and you can see that we had a major long-term trend line. Boom, 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 that we were bumping up against. These are our automated trend lines. I would pay attention to them. They're very important, especially one that's that long term. So look at where the stock bounced. I wonder if these trend lines are valid. So these are all automated. They make it very easy for you to see where these major support and resistance levels are coming in. These are significant levels. So you get the stock bouncing. This is AVWAP right here. And you can see that it's going to hit some resistance. There's the 200-day moving average. It's going to hit a little resistance around this AVWAP-E. The news was not good for the company. They lowered guidance. So I would like another bite from this apple because this is a major technical breakdown. What would I do? How will I know? Well, I can use a couple of other indicators like, let's say, LRSI. And I'm going to put that on the chart, and I'm going to go into maybe a 30-minute basis, just a little bit longer term. What I'd be looking for is a breakdown below 80 because that's how you trade LRSI. And right now, that signal would have come through, and this would tell me that, yeah, you'd want to evaluate this stock for a potential entry off of a bounce. There's your bounce, that now the stock is starting to weaken, and it could move lower. So one thing I can do here is say, yeah, you know what? The stock held up pretty well on Friday. Market had really, really weak price action, but the stock held up strong. So maybe I'm a little bit early on this short. So instead of taking a position, I'm going to double click on the low of that bar right there, and I'm set an alert. if the stock rolls over, I've already got LRSI going my way on a 30-minute basis. If it breaches the support level, yeah, the sellers might be back. But after big selling like that and big follow through selling like that and follow through selling on Thursday, it's not going to go down forever. You're going to get a bounce in there somewhere. Shorts are going to take profits. Buyers might nibble a little bit. So you can expect these retracements. But longer term, this stock wants to go down. So set some alerts. I can also go into an H1 basis, take a look at that and go, oh, look, LRSI is still well above 80. So why don't I do this? If I want to have an alert, I'm going to create an alert based on LRSI being below 80. So I'm going to click that, below 80 on an H1 basis. Click that less than sign right there, add it. Now I'm going to get an alert. If this H1 goes back below 80, that would be a legitimate sell signal, and I don't have to act on the signal right away, but what I want to evaluate is what happened on that bounce. How tall was that bounce? Did I see any heavy volume and stacked green candles that might be a warning sign that, hey, this stock still has more upside to it? Or was the bounce weak, shallow, wimpy, mixed overlapping candles? What was the bounce like? That's where I'm getting my information from. That's the clue. I already know, blam, sellers are there. What did the bounce look like? Is it time to get in? So I set my alert and I'm going to be evaluating it. I'm going to be evaluating the market as well. So let's go in. Let's talk market. We've been waiting for this news, and we knew that there was a major window that was approaching, and that window was this week. Mega cap tech stocks. We had a couple of them the previous week. Super, super important. So let's go through a quick rundown of mega cap tech and how it did. Tesla, down after the number. Google, down after the number. Microsoft, down after the number. Amazon, down after the number. Apple, down after the number. The only one that was up after the number was Meta, and that gave a lot of its gains back. So as one piece of the puzzle that we're looking for, which is earnings, mind you, when the market was rally mode for the last 6 months, actually probably the last 8-10 months since November. You can scroll out, that was November. You can see the powerful rally that we had. It was all driven by mega cap tech stocks. 60% of the gains this year had come from 6 or 7 stocks in the S&P 500, and they comprise about 25%, a quarter of the S&P 500. So when you talk about, gee, what would be important during earnings season? What would really drive the market? What would excite investors? It would be if mega cap tech stocks actually outperformed. Well, good results have been priced in, and there's been a lot of excitement over AI. Valuations are stretched. That means that there's some room on the downside. So any kind of fear that short sellers would have had before mega cap tech earnings releases waned very quickly. And they were going to wait for these tech stocks to report because they didn't want to stick their head in that news. But once all the mega cap tech stocks have reported, shorts could get much more aggressive. And especially when almost all of them had negative earnings reactions. So now you've got mega cap tech stocks out of the way. What happened on the economic front? We had a ton of economic releases this week. We had ISM manufacturing, weaker than expected. In fact, haven't seen a weak level like that for quite a while. I believe it was the lowest level of the year, 46.8. That's contraction territory. ADP. How did that come out? Well, ADP, I believe the number was somewhere in the 122,000 range, much softer than expected. So, job growth in the private sector was starting to slow. We also had the jobs report on Friday, much weaker than expected. I think it was 114,000 if my memory serves me, much lower than the 172,000 that everyone was expecting. So now, all of a sudden, where the economic releases had been chugging along, everything was looking pretty good. Now, all of a sudden, everyone's fearful that, hey, we could be going into a recession. The unemployment rate is starting to spike here. We did have a couple of clues. We had initial jobless claims came in at 245,000. So that's just a weekly number, and we get these weekly numbers constantly. That was the highest level that we've seen this year. Uh-oh. A little bit of a warning sign maybe. So we're starting to see the employment picture wane, and that bared out in the jobs report on Friday. Now, in the initial stages of a market decline, when you have this type of trend strength, buyers have been conditioned by the dip, by the dip, by the dip. So there will be a little dip buying in here now that we've tested the 100-day moving average. But for me, there was a pretty good tell, and it was right in here when we had the 50-day moving average that we had poked below. Okay, so now we've had a decent little pullback. We're looking for a bounce this week. Again, we have been day trading for about the last 3 weeks with fantastic intraday ranges. There was no reason to take any overnight risk. Let's wait and see if my thesis was right that the market could possibly be rolling over. So we're in wait and see mode. And you can see how we had this test of the 50-day moving average and a really pretty substantial bounce on Wednesday. And then we also had the FOMC statement, which was kind of a nothing burger on Wednesday, but I think the real selling started to come through Thursday and Friday, especially after those mega cap tech earnings releases. So what did the Fed say? Well, the Fed said, economic growth seems pretty stable right now, and they didn't really give anything new for us to sink our teeth into. The market has been waiting for a rate cut in September, and the Fed certainly didn't give the market any warm fuzzies to latch onto. The Fed is going into recess for the next month and a half. Washington, D.C. is going into recess for the next month. So who's minding the shop? Nobody. Well, the market gets nervous over all of that. And August and September, even through most of October, that is a seasonally bearish period for the market. I also think that the elections are going to start weighing on the market, where it seemed fairly certain that Trump might win a few weeks ago. The market was preparing for that. And I'm not making a political statement, okay? So just dispel that. But the market had some certainty. Okay, it looks like the election is going to go this way. Right now, there's a lot of uncertainty. All of a sudden, the polls have shifted, and it's more of a 50-50 proposition. And I'm not trying to predict what the election is going to do or what the election is going to be. The market trades off of uncertainty, and there's a bit more uncertainty in terms of the elections, in terms of where interest rates might go, in terms of economic growth, in terms of earnings. All of that is starting to weigh on the market, and it happens in August, September, October, most years. The other thing that you have coming into play right now, I've also mentioned this recently, is we're heading into a news vacuum. This was the last really big piece of news that we're going to have for a while. And so whatever happened this week, whatever result we had, up or down, is going to impact the market for probably the next 5 or 6 weeks. Traders are going to take time off because the market liquidity starts to dry up. The kids are going back to school. We're kind of in the summer doldrums. There's no news to trade off of. Earnings season is starting to wane. So we'll still get some pretty decent price action this week. So the bottom line is that I'm expecting the market, after a decent little pullback like this, I'm not looking for the bottom to absolutely fall out just yet, and it may not do that. I'm also not looking for the market to just absolutely crater and have like a 30% decline, anything super nasty like that. I'll show you in just a second the pattern that I think is going to unfold. But after testing the 100-day moving average, here's what I'll be looking for. And here's what I think we're going to get. We'll get a little bit of a reprieve, okay? They're going to try and bounce this thing after a really pretty decent sell-off, and they're going to try and get the market back to the 50-day moving average, but I think we're going to find resistance there. I'll certainly be watching for it. So let's get into a little mentality here because this is important. So for swing trading, I've told you, you've got to stay in cash right now. You should not have any swing exposure because we don't know how this is going to be resolved. Are we going to run right back to the all-time high with ease? If so, that puts us into a bullish camp. I didn't feel that that was likely. I needed proof because I do not pick market tops. That is the easiest and best way to blow out your account. So lots of people looking for market tops in here. Ooh, there's a dip. I'm going to get short. This is it. I knew the market ran up so far. This is the big one. And then the market continues to go higher. You get a nice little pullback like this back in April. Ooh, here it is. Buy puts. I knew this was a time. Sell in May and go away. Uh-oh. They had their ass handed to them. So for anybody that tells you they're super guru right now, that they knew the market was going to roll over and I'm long a lot of puts, well, this time they could get lucky because I think they're going to be right. Back in here, you didn't know that, so you didn't trade like that. We were trading like we were going to get a bounce, and we did. And then we added here, and we watched to see what happened at the breakout, and we could have added right in here, but more likely in here. So we're still riding this light volume rally higher, but as we start getting into these tiny compressed candles with a major window that had a lot of news coming out, we went to the sidelines. Then we waited, okay? So we didn't start loading up on puts here. We're waiting to see, is this thing going to bounce? Now we finally got the information we need. Everything is lining up for a soft patch in the market so we can finally start to swing trade. Now, here's the dilemma. For any of you who might feel, looking at this price action, the fact that we tried to bounce in here and we got absolutely squashed on Thursday with this long bearish engulfing candle, for those looking to swing trade, yeah, you absolutely could have gotten short on that. You could even be short in here. What do I do right now? Pete, can I short this market on a swing basis? You can if you have the wherewithal to take some heat. And if you feel that based on where the market closed Friday, that the market's going to at minimum come down to a 200-day moving average between now and the end of September, end of October, I would say you're right. I agree with you. I think based on the price action I've seen that we're going to be able to reach that 200-day moving average. The problem is you mentally have to be prepared for the market to get back up to AVWAP-Q, maybe even this downward sloping trend line. So if you are a nervous Nelly trader, oh my God, the bounce, it's killing me, then you should not be taking swing shorts until you get some kind of a bounce in here. But if you're willing to weather that little storm, knowing that getting down to the 200-day moving average is very, very likely, then take a starter position in your shorts and know that you're going to have to weather a bounce somewhere along the line. And when that bounce comes and stalls below a technical resistance level, like this downward sloping trend line, AVWAP-Q, 50-day moving average, I expected this. This is not a bad thing. It is an opportunity for me to add to my short position. Is now I'm confident we're going to hit the 200-day moving average, and now I've just got a better entry point to add to my short position. But I have not loaded the boat because I want to see that resistance hold, and I want to see the market start rolling over. And then when we take out the 100-day moving average on the next leg lower, you can add again and add fairly aggressively, because now you've got one position on, another position on, and when you test that 100-day moving average, your average cost is way up here. So you have staying power, and now we take out another key support level. Now I can add. Now I'm just adding, and my average cost is going to continue to be way up here as I get that follow through selling. That's how you trade, and that's how you add to your trades and your positions. Again, the most important thing is to be able to identify where the market's starting to struggle to advance, so then you go to cash. And it's a beautiful thing. Some of you have been so patient. Hats off to you. I've been telling you this for a few weeks. A lot of people don't listen to me, but some do. And how nice was that to start watching the market come in, and instead of fumbling around and running around with your head cut off, wondering how you're going to manage these losing positions, and I really can't take the loss right here. I needed that money. Whatever your mindset is, you got to take the loss in here. You should have been on the sidelines. Instead of having that mindset, you're in I got a lot of cash. I've been waiting for this pullback. I'm going to be waiting for really nice shorting opportunities to set up. So I kind of talked about the person with the mindset who's able to take a starter short and will be adding when that resistance level is tested and rejected, and adding again. It's the mindset you should all be in from a swing trading standpoint, but there are going to be some of you who don't have that comfort level. You need to see a bounce. Okay, well then here's what you would be watching for if you can't weather a bounce. So you don't have a position on, watch for the 50-day moving average to provide some resistance, and then AVWAP-Q. So in this area, probably around the 540 level, that's where I'd be looking for the market to maybe get back to, and then to take another leg lower. That'd be an excellent entry point for swing short positions. And then you would add on a breakdown below the 100-day moving average. That breakdown has got to be really hard. So we don't want to come down and poke, 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 poke. That's not how we want to attack the 100-day moving average. We want to come down and absolutely annihilate it, obliterate it. Usually on the first test, you're going to get bounces off of these major moving averages. So you want to make sure that they're brief and shallow. And when the market kind of tests the upside, so they're testing, the programs are testing to see what's on the ask. Is there anything there? Can we lift it very easily? Or is it stubborn? Are they replenishing the ask? Replenishing, replenishing. If they're replenishing the ask, that's selling pressure. That's telling them, don't go there. There's a lid here. The next move is down. If they can lift that ask, then you got another leg higher. If that resistance holds, then they know, okay, that's it. That's as high as we're going to bounce. It was brief and shallow. We're going down. There's a lot of selling pressure. So that's what the programs do out there, is they evaluate this. So we want to see resistance holding at the 50-day moving average, possibly at AVWAP-Q. But yes, it's going to be time to start looking for some short positions on a swing trading basis. Now, one more word of caution. And that is that when you get a market that declines, it comes in really big spurts. So you get this wave of selling, and then the market finds support and you get a bounce. And then you start seeing a series of lower highs. Good, that tells us wham, 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 resistance, wham, 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 resistance, lower high. Couldn't even get back to that previous high. Why is that significant? Because the guys who were selling like mad right here and that see this little drop, they're like, oh my God, I really didn't get all my shorts off and I wanted to sell more. The people who are long are also thinking, gosh, we've got to get rid of as much stock as we can to reduce our risk exposure. Now we've got another little opportunity. So they keep the pressure on. Little upward sloping trend line. This is where you want to short. You've got signs of resistance in here. So on this leg lower, all right, we found some support. We had a nice bullish trend day in here. All right, we might bounce a little bit after a nice decline like that. So take profits on your shorts. If you are an option trader, you get the double whammy. Hello, thank you very much. When the market sells off like this, the bonus is option implied volatilities explode. They expand. So you're making a lot of money based on where your put is relative to the strike price and the fact that the stock has fallen, but you're also benefiting from this explosion in option implied volatilities. So don't wait for the bottom. When you get a nice, really big drop like that, and especially when you get a nice bullish trend day, take some money. All right, you get another little chance here. We get another bullish hammer in here. Don't wait around. Now you get the market releasing and showing signs of resistance. This is where you reload on your put positions. You have signs that resistance in a downward sloping trend line is forming. So you reload here. Whoosh! Another big drop. Take the profits. Expect a bounce, because this is a really big move in a very short period of time. Look at that, right above the 200-day moving average. So you're taking profits here again. Then when you get another bounce, you're waiting for signs of resistance. Hey, we're hitting resistance around the 50-day and the 100-day moving average. This all looks good. Ooh, nice long red candle through AVWAP-Q. All right, this might be another opportunity for me to try some shorts. So when you're trading the short side, big, fast, steep drops, take your gains, wait for the bounce, reload. Whoosh, big sell-off, take your gains, especially on those major moving averages, wait for a bounce, reload. Those are your instructions for the next 2 or 3 months. I really don't believe that we're going to see much of a market rally over the course of the next 2 or 3 months. I think through October, just because of the election uncertainty, we could see a fairly choppy market. What's going to matter is, what do the economic numbers look like? Are we continuing to see some softness? So as August unfolds, watch those numbers. There's a big number coming out tomorrow. ISM services. 80% of our economic activity is tied to the service sector. Very important number. If that number comes in below 50, you're going to see elevated concerns that we're going into a recession. Now, ISM is a really interesting economic release to me because it's a survey. They're surveying purchasing managers to find out what their current intentions are for the next month. So it's extremely current reading on what's happening economically. Watch that number tomorrow, but then that's really it. We don't have too many other major economic releases for the next few weeks. So we'll see how that comes out, but even apart from ISM services number tomorrow, any bounce is going to set us up with a good entry point for shorts, especially on stocks that have relative weakness, especially on stocks that have displayed recent relative weakness. So when you get this market bounce and those resistance levels hold, guess what you're looking for in the underlying stock? What do you think? Just try and visualize. What do you think you're going to want in that underlying stock that's showing so much weakness? You're going to want to see the stock not bounce very much with the market, because that tells you that the institutions are still in there, wham, 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 beating on that thing. They need to get out, okay? If the stock does bounce, ideally, it's broken some key technical, was support, now becomes resistance levels, and the stock can't get through that resistance when the market is bouncing. So if that resistance is in place, that's going to be an excellent short. So let's go find some stocks. Again, I'm giving you the roadmap for the next few weeks, okay? I'm going to be taking some time off. Make sure to visit the live event that I do with Harry on Wednesdays. That'll be another snapshot of what's unfolding. Maybe, just maybe, we'll have a little bounce in here, and that'll give us that entry point that we're looking for. So I'm going to go through. I've already spent a lot of time in this video. I'm going to go through and I'm going to find some stocks. I'm just going to go into my red royal flush search, and I'm going to click through some daily charts. That's all I'm going to do. It's so simple. This is one of my favorite swing trading searches. Pop Bear is another one. I haven't looked at that one, so let me just scroll through here visually and see if we've got anything really compelling that is jumping out at me. These will all be really good stocks. They've all broken down. Take a look at Z here. AFRM, this has been a leaker, just gradual downtrend. We're going to stick with Red Royal Flush, go through the top stocks here, Amazon being one of the first ones. This is a pretty major technical breakdown here. You can see all of our automated trend lines that have been coming into play on this drop. Big bullish hammer on Friday. So the stock dropped dramatically. And you can see how that 200-day moving average is still providing some resistance. But after the price action Friday, market sold off, finished near the low of the day. This stock actually rallied most of the day. You can see, sets that early low when the market was making new lows. The stock had actually bounced and was starting to try and fill in some of this gap. That 200-day moving average is going to provide some resistance, so I would not be looking for any longs right now. I wouldn't be trading Amazon because it has a chance to maybe get above that 200-day moving average, but watch that key critical level. This is a significant breakdown. So I wouldn't be trading Amazon right now. It's just post earnings. I'd be waiting to see what happens. GE would be nice if it can get below the 100-day moving average. You've got a nice upward sloping trend line. Here's how I address that. I click GTC, boom, boom, double click on the low from Friday. If that's breached, I'm going to get a trade alert. All right, then it'll be of interest to me. Microsoft, I talked about the mega cap tech stocks. Microsoft, there's your earnings announcement. No bueno. It's really sold off hard. It found support at the 100-day moving average. It's finding support on this major upward sloping trend line. So I wouldn't be shorting Microsoft in here because there's a good chance it might bounce a little bit. If it struggles to get through the 100-day moving average, then maybe you've got a shorting opportunity. Set alerts like the LRSI alert that I showed you earlier today. Micron, beautiful, nice, clean breakdown. Lots of room to the next upward sloping trend line. Below the 100-day moving average, below the 200-day moving average. And I can tell you on June 20th, I did a live event. Go back and watch my video on June 20th. I knew that bearish engulfing candle on Micron. Now, it came before earnings, was a sign that this stock was heading lower. And there's your earnings announcement, and it has not been able to recover ever since. Don't take my word for it. Go back and watch. Coin. Coin has a nice breakdown below this upward sloping trend line here. It's below the 100-day moving average, has plenty of room to the 200-day moving average, but it's been pretty resilient. Stock's holding up pretty well relative to the bloodbath that we've seen in many other stocks. Ooh, like this one. Zoom out, take a look, see where that long-term trend line comes into play. All right, it's breaching major trend lines. mRNA is below the 100-day moving average. mRNA didn't just poke the 200-day moving average, it blew through it on earnings. See you later on Friday. It's a nice short. I like this short. What am I going to be looking for? I'm going to be looking for a little bounce in the market off of the 100-day moving average. When I get that little bounce in here, I want to make sure that mRNA is staying below AVWAP-E and this low post earnings right in here. Just looking for it to preserve as much of this sell-off as possible. So a little weak, whippy bounce is going to tell me that sellers are still wham, wham, wham in there selling it on the market bounce. So market bounces, most stocks should bounce. When the stock can't bounce and these resistance levels stay intact, that's how we know we're going to have a good entry for a longer term swing short. Stock has a major breakdown, lots of room to fall. Okay, I like it. mRNA looks like a really good short. That could be one that I would have for a bearish pick. Upward sloping trend line right in here. Go back and watch my video from 2 weeks ago. I know Dell was on it as a short. We wanted to see a breakdown below the 100-day moving average. It had already breached that upward sloping trend line, and you can see how the stock has continued to sell off below that 100-day moving average. Now it's testing the 200-day moving average, and looky there, we got a breakdown below it. Earnings coming out though, 8/29, so you still got plenty of time. I would watch that. If it can't get above the 200-day moving average on any market bounce, this is going to be a really good short. Dell could easily be my short pick. And the nice thing too is if you can, try and find stocks that have already announced earnings. I've kind of gone through enough, but I'm going to be looking for, there are a number of stocks that I can highlight. I'm going to go into GM for one reason. And the reason is that this stock has also broken a nice horizontal support level, and it was not able to get above the 100-day moving average when the market was bouncing earlier this week. Just couldn't do it. There's your earnings announcement. You can see they didn't like the earnings, even though they beat estimates and all. Stock continued to sell off, and it easily breached that 100-day moving average. Well, if this was just a head fake, then buyers would have come in and they would have scooped the stock as soon as the market had a little bit of upside to it, but they didn't. Market sold off, and then on Friday, the stock really got hit pretty hard. You do have a bit of a fundamental twist to this play, and that is that if the economy is slowing down, if people are having difficulty finding work, then they're not going to be buying big ticket items like cars. And so that is why GM is falling, and it's got plenty of room down to the 200-day moving average. So what I'd be looking for is a bounce in the market and GM not even able to recover this entire red candle. Just struggling, struggling, struggling. If by chance it fills in this little gap right in here, okay, I guess that's tolerable for me. I'm looking for a longer term swing short. So we continue to get weak economic numbers. Everybody's getting a little bit nervous. Hey, the Fed's in recess. Are they going to cut? Are they going to stay in tightening mode? You know, are they going to do anything with quantitative tightening? Are they going to miss the boat here? Are they going to wait too long? Now, there's a Jackson Hole conference, which they'll talk a little bit about it, but I don't know that the Fed's going to give any big clues and say, yeah, we're going to ease. And right now, you'll get a little bit of a bounce in the market on the notion that the Fed could ease. This is going to increase their likelihood to cut rates in September. So the bad news is good news crowd will be out there going, yay, we should get a rate cut. Be careful what you wish for. I've been saying this also for a long time. We don't want the Fed to cut rates because it means that the economy is starting to soften. What we want is for rates to stay relatively high and for economic growth to continue. And we got GDP at 2.8%, very backwards looking number, very old number. Felt pretty good when the number came out, but that's the problem with looking at GDP. So now all of a sudden everyone's thinking, nah, this is looking like we're going to go into a recession, so that is going to be the fear. Hopefully the Fed will respond and cut rates. I think they'll have plenty of reasons to do it, and they've got lots of ammo. They're in the driver's seat right now because inflation has started to come in. So they've got wiggle room. They're in a really good position, and I think that's what they're going to do in September. But hopefully between now and then, economic conditions don't deteriorate too rapidly. So tiny little bounce. When the market bounces, we don't want the stock to bounce, and that's what tells us that sellers in that stock are still very aggressive. They want to unload shares, and that gives us our opportunity to enter the short at a very good price on a swing trading basis. So what kind of time frame am I looking at? What would I want to be doing with my shorts right now? Well, if you have high option implied volatilities with these major resistance levels in place, then you're going to want to look for stocks that have relatively high option implied volatilities. So let's say that you were in looking to short Qualcomm. Well, what you can do on a swing basis, you can see there's the earnings announcement, and there's what the stock did after the earnings announcement, closed below the 200-day moving average, market bounces. You're going to be looking for an area where you can sell some out-of-the-money bearish call spreads, maybe keying off of this 180 level if the stock can bounce to 175. But you're going to be evaluating that based on the option implied volatilities. If they're above 35, it's at 45, then you favor selling out of the money bearish call spreads because the stock will be more volatile. It'll move farther. You want to distance yourself from the action, take advantage of accelerated time premium decay, and you want to be selling those with 3 or 4 weeks left until expiration. So that's one way that you could approach this. Fairly passive, great way to swing trade, higher option implied volatilities. Look for those resistance levels that the stock would have to get through and sell out of the money bearish call spreads. You want to make sure that the company has announced earnings. We do not want to sell these and have that spread span an earnings announcement. No bueno. Bad move. Horrible move. Okay, so make sure that you don't have earnings coming up on those types of stock plays. The alternative is that you would be looking to buy deep in the money put premium with 2 or 3 months worth of life where the stock has, it's so far in the money that the options are trading at a delta of say 0.7 or so. So you buy those options almost like a surrogate stock position, short stock position, and then you just wait for the stock to continue to drift lower. That's the other way that you can be shorting on a swing basis. So as you go through and start taking a look at some of these shorts like Micron, right here you've got the stock right around 92.70 is where it closed. You've got this nice massive resistance level at the 200-day moving average. So if you get any kind of bounce in the stock, you can see it's at 101.28. That's where your 200-day moving average is. So that's where you'd want to be selling your bearish call spreads above that level. You want to be able to get in a 20% difference in the strike price. So take the strike price. So if you have 5 points between the strike prices, you want to be able to get 20% of that in terms of a credit. That's going to yield a 25% return. So let's just take a look at Micron. And these spreads are not going to be there right now. Let's go, because we need the stock to bounce a little bit. So if we're looking to get that type of credit, we've got to go up to the, well, let's call it the 102.50s if they've got that type of strike price. And they don't. So they've got $1 increments here. And we're selling a call spread, so we're going to be selling that. And let's say that we do a 5-point credit spread. We'll go to the 108s. And so for this, you can see it's almost there. 280 bid, offered at 2. The spread is trading 79 cents bid, offered at 134. So you can almost get that spread right now. And that's only going out to September 6th on this spread. So wait for the bounce. Maybe you can even get that spread done using this resistance level, which that high was at 111. So maybe a 110, 115 bearish call spread. Now you've got the 200-day moving average to lean on, and you've got this horizontal resistance level here. The more resistance levels between the current strike price, the current stock price, and the strike price, the better. So your strike price would be up here, your stock price is down here. You want lots and lots and lots and lots of resistance levels in there, as much as possible. So that's how you would play it. And you could see that the option implied volatility on Micron is 57. So the alternative is to find an in-the-money put that's relatively cheap, and then you would buy that. So we're getting a little long here. So, excuse me. I've got to find a pick. I think that's what I'm going to go with. I'm just going to give you a Micron pick. I like that GM breakdown, okay? I would have no problem buying GM puts. Take a look at the option implied volatility there, 31. So this is going to set up really well for that. I would like to see the stock not get above the open from this long red candle. Okay, so that'll be resistance, and this upward sloping trend line is resistance. And we'll take a look at the low there, which is $43. So I'd like to be buying in the money puts. And let's see what we've got here on GM. Now, mind you, we're buying option premium. Pete thinks that the market could go down for a while here. So let's give ourselves out to October and let's go deep in the money. Maybe the $50 puts. And we could see that those are trading at $9 with the stock at 41. Okay, let's think about this. They're intrinsically almost worth $9. Okay, so the $50 puts, watch the stock. If you can get the $50 puts, maybe at that juncture, you know, the stock rallies up to maybe $43 or $44. You can even go with the $55 puts. Go as deep as you possibly can. You won't be exposed to time premium decay, and that's why we want to use this strategy. So I don't know what the stock is going to do or how high it's going to bounce. I would be looking to buy these $50 puts. If the market tries to bounce to the 50-day moving average and it gets rejected, then I would like to get into these maybe somewhere around the $7 level. Okay, I want to see this long red candle hold. I want to see the stock be very, very stubborn in trying to recapture that long red candle. So when the market's rallying, I want to see the majority of this thing hold. That tells me wham, 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 wham. The sellers are still in there. If I can buy it for $7 or if I can buy it for $6, as long as this red candle is intact, I'm going to be pretty happy putting that position on, because again, I'm operating on the notion that the market is going to struggle over the course of the next 2 or 3 months, and that companies that have a lot of cyclicality to them are going to really struggle as well. So that's how I would play GM. That's how I would play Micron. I've given you a couple of stocks to look at. Watch our Wednesday live event. Please come in, sign up for it. We do it live during market hours. We field your questions. So there's a good chance that your question is also going to be someone else's question. And you'll get to see how we respond. 2 different professional traders, both with different perspectives, answering your questions. Those live events are great. Hope to see you then. If you have the ability to take some time off, typically mid-August to the end of August is a great time to also take some time off, because you will see the volume start to dry up over the course of the next couple of weeks. Thanks so much for watching. Hit that like button, and we'll see you Wednesday. Thank you.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.